Hi everyone, it's Jack with another video, and today I'm going to be talking about Palantir Stock, which just released its Q4 earnings, and the stock has bounced about 15% of times recording. It was initially 20, it's coming down, it's now around 15%. Stock's had a putrid last 365 days, down 42%. It's at all-time highs, about $40. Recently, 52-week high of around 14. It's still down nearly 50% from that. This will put it around $9, which would be a decent return from its 52-week low of $5.84. That is mainly because this company has announced that it's adjusted profitability for the first time, which is a big step for any software company and a big surprise considering it's previously around 7 cents under. However, it is adjusted profitability, and we'll talk about the puts and takes with that. But let's give them the flowers for now and talk about the report. First, we'll start with some high-level summaries, and then we'll go a bit more in-depth into the earnings report. Achieved net income profitability for the first time in the company's history, so pat on the back for Palantir. Of course, the earnings per share on a GAAP basis was just 1 cent, so if the stock price is $9 tomorrow, that's going to be a 900 PE, not exactly cheap by any means. Revenue grew 18% year over year to $509 million for the quarter. US government revenue grew 22% year over year, adjusted operating margin of 22% in Q4, and 261 deals closed, up 20% year over year from 217. These are all reasonably impressive metrics. So these results are fine in isolation. I think comparing to the full year numbers gives a bit more colour. They are generally down from the averages you would be expecting when looking at the full year. US businesses grew 32% year over year to now $1.2 billion. US commercial revenue, which is seen as a bit part of the business that Palantir really needs to sort out, up 67% year over year, so really impressive. Revenue grew 24% year over year in total to $1.9 billion. Customer count increased 55% year over year to 367. That's a really bullish indicator in my opinion. Adjusted operating margin of 22%, again pretty much consistent with Q4, and 976 deals closed, up 61%. Sorry, I've been pretty happy with it, up 600%. Again, another bullish indicator. In addition to customer count, this product seems to be gaining traction, and the sales team are working overtime for sure. But overall, at a 900 PE, we need more than 24% year-over-year growth for sure. This business from a revenue and profits point of view is not overly impressed me. What I am very impressed with was the customers, as I mentioned. So I just wanted to zoom in on that in a minute. From 237 this time last year to 367 right now, 55% increase. Regular quarter-over-quarter gains. Has slowed down towards the end of the year, which is kind of what we expect in a tightening environment, potential recession. No one really wants to sign up to transformative software that has massive prices, long-term contracts, when we're potentially going into a recession in a high inflation environment. So that's to be expected, but still really strong growth for the year. Palantir ended this year with a net dollar retention rate of 115%. That is impressive. However, it's not as good as it used to be, but still a bullish indicator. Customers on average spending 15% more than they did the year prior. If they can keep rolling over a large amount of customers, this is going to be really accretive to revenue in the medium term. Even if they're not adding a ton of new customers, you can still expect them to grow on average 15% a year if they keep this up, which is really strong. Of course, aside from attractive revenue growth, the real reason anyone gets excited about software companies is their gross margins. Adjusted gross margin actually increased to 82%, consistently above 80% for the year. These are gross margins that people can get really excited about. At scale, this could be a genuine cash flow beast, provided they scale back some expenses. And there are definitely expenses that need to be scaled back on for sure. But these sort of gross margins, even on an adjusted basis, are extremely impressive and are foundational for a good software company like Palantir to keep up, and they seem to be prioritising this well. When I first read this report, I was really surprised to see the stock was up 20% after hours. The primary reason was soft guidance. Despite the profitability, this guidance is still pretty soft. Revenue expected between $2.18 billion and $2.23 billion, so you're looking at between 15% on the upside revenue growth. That's not particularly strong. That is a deceleration from this year. Of course, demand is softening. As I mentioned, there's going to be a general tightening of pockets and purse strings everywhere, particularly in large contract commitment, large dollar amount industrial software. However, this is soft for any business. When a business is valued as highly as Palantir is, you just can't really be accepting 15% revenue growth and decelerating growth. They're still expected to be GAAP net income positive, and they're expecting income from operations of around $500 million. So you're looking at 25% operating margins. For the first quarter, they expect between $503 and $507 million, and an adjusted income from operations of $91 to $95 million. So again, in that 20%, 22% operating margin range. if not a bit less. These are not particularly impressive guidances, and I think the stock will probably come back down to earth and lose much of the gains that it's made in the after hours when the furore over it getting gap net income profitability dies down. In the long term, management were very bullish on the Palantir's long-term prospects, as they should be, particularly with the ramping up of interest in AI. I think Palantir will do very well from this, and rightly so. I think they'll be able to capitalise that a lot. So I think a couple of years of 10 to 15% growth, and in the future I can see really big returns to this business. One thing I'm taking as a big positive for this year for Palantir is the reduction in stock-based compensation. It's a general theme amongst many high-growth software companies that stock-based compensation is a little out of control. You can see in 2021 they gave out nearly $800 million of stock-based compensation. That is an awful lot of stock-based compensation. In Q4 2021 alone, they gave out 167 million nearly. In Q4 2022, down to 130, and for the full year, 564 million, nearly 565 million. This is a decent reduction, and I'm really impressed by the amount this came down. And if this continues to be a general theme, margins are only going to increase. This is going to be a massive positive effect for this business, and they can actually start looking at genuine free cash flow profitability and genuine net income profitability rather than on an adjusted basis. And this is absolutely the right direction for this business, and if this can continue, we're seeing the start of Palantir actually generating consistent cash flows. Overall, I think this is a relatively standard quarter with a couple of rays of sunshine and a couple of pretty worrying trends in the short term. However, in the medium and long term, I don't think the thesis for this company has changed whatsoever, and I don't really think it has changed on whether this is a buy, sell or hold right now. It is still exceptionally highly valued. Is it as highly valued as it was in 2020 and 2021? No. But could it justify the price it was then? Probably not as well. You're looking at a P of where it is right now of around 900 in the after hours. So is this a stock that can be really recommended to be a buy right now in any meaningful quantities? No. Is it something that you could take a speculative position in? Sure. I have a speculative position in Palantir, for full disclosure. Do I think it is going to be a smash the market this year? Probably not. Do I think it is going to smash the market over the next 10 or 20 years? I think it'll do pretty well. I'm fairly confident in keeping this business at 2-3% weighting in my portfolio. I'm fairly happy with that. Of course, you let me know what you think in the comments below. I don't personally think it's a buy right now. I'm not really willing to add. I tend not to add on big updates anyway. You let me know what you think in the comments below. Of course, don't take any of this financial advice. You should do your own research and due diligence. Let me know what you think of Palantir. Let me know what you think of this quarter. Whatever you think, let me know in the comments below. Like and subscribe and you enjoy the video. I'll see you again next time.